In this video, I will reveal 6 lesser known yet powerful price action setup that bank and smart money traders use every day. First, accumulation and manipulation phase. Wyckoff method. The Wyckoff method breaks market movement into phases. Two of the most important are accumulation and manipulation, also called as spring or shakeout. First, accumulation phase. This is where smart money quietly builds positions. Price often moves sideways in a range after a downtrend. Retail traders think that the market is dead or unclear, but in reality, large players are buying heavily from weak hands. So, how to find it? Volume give clues. You will notice higher activity near the bottom of the range. Second, manipulation phase. This is a false move inside the accumulation range. Price breaks below support quickly, triggering retail traders stop loss. It looks like a real breakdown, so many panic and sell, but smart money use this movement to buy even more at cheaper price. After the spring, price snaps back inside the range and rallies strongly, confirming that the breakdown was fake. So why does it matter? If you sell in panic during manipulation, you hand your position to smart money. But if you can recognize it, you can actually join the big players and catch the reversal early. Second, change of character. Change of character means that the market is shifting direction. It usually happens when the price breaks the last high in a downtrend or the last low in an uptrend. Basically, that the market is saying, I don't want to continue in the same trend anymore. Third, Quasimodo pattern. This is a reversal pattern. Price first makes a series of higher highs in an uptrend or lower lows in a downtrend. Then it makes one last fake move in the same direction before reversing. For example, in an uptrend, price makes a higher high, higher low, and then higher high, and then suddenly it makes a lower low, breaks the structure. Next, it forms a small fake higher high but then fails to continue and then drops strongly. That last fake high is the ideal sell for smart traders. Fourth, equal highs and equal lows. Equal high means price touched the same high level 2 or more times, and equal low means price touched the same low level 2 or more times. These are called liquidity zones. Why? Because many traders put their stop loss just above equal highs or just below equal lows. Above equal highs equal to lots of stop loss for sellers, means liquidity for buyers. Below equal lows equal to lots of stop loss for buyers, means liquidity for sellers. Smart money know this. They often push price into these zones to grab liquidity before moving in the real direction. Before we continue to the fifth pattern, if you're still watching, that probably means you're enjoying this video. So please like this video, it really helps me a lot. And don't forget to subscribe so you will be the first one to get notified when new content drops. Okay, so our fifth pattern is fair value gap, which is also known as FVG. A fair value gap happens when price moves so fast that it skips levels. On the chart, it looks like a gap between candles where no trading really happened. It shows imbalanced price action. Buyers or sellers were too strong and the market didn't trade fairly on both sides. So how to spot it? Look at 3 candles in a row. If candle 1 and candle 3 don't overlap much and there's a gap around candle 2, That empty space is the fair value gap. Why it matters? Price often returns later to fill the gap before continuing. That's because the market likes balance. It wants to trade where it skipped earlier. 6th pattern, breaker blocks. A breaker block is a special type of support resistance zone. It forms when a previous order block fails and price moves the opposite direction. Think of it as a trap where smart money flips the level. How does it work? Price creates an order block where big buying and selling happened. Traders expect price to respect it, but instead price breaks through strongly. That broken block now becomes a breaker block. Price often retests it before continuing. So these were the 6 setups that can help you change the way how you look at the chart. If you want me to reveal even more setups like this, then drop a comment saying part 2 and I will make the next video. Alright then, see you in the next one.